Welcome to today's video. Before beginning, please read the trade disclaimer. Please understand that this is not financial advice, just my commentary and opinion. Hi everyone. So in this lesson, we're going to be looking at the descending triangle. Please understand that the descending triangle pattern is the opposite of an ascending triangle pattern. And what we use the descending triangle pattern is to potentially look for a breakout trade on the downside. So what we normally get is we get points 1, 2, 3 and 4, which will help build us our descending triangle. And we will then look for a potential breakout at point 5. Sometimes, as previously mentioned, we might not get the breakout at point 5. Price could reverse, test the high of the descending triangle, and then reverse back down and break out. But in an ideal situation, you'd look for this 5-point touch. Okay, so the breakout is at point 5, and we measure the take profit from 2 to the lower part of the triangle, effectively, which is where 3 and 5 have touched. Okay, which is represented by this green line. We take that height and push this to where we'd expect the potential breakout to be, and that would be our take profit target. So in this case, this particular pattern, what we want also to add is where we could have potential stops. So the three areas I have highlighted are looking at point 4, which is the last high of the triangle before we break out to the low side, could be our potential stop. The next area could be 2/3 way down, which is within the triangle, and the entry is at point 5. Otherwise, the later stop loss can be further down, where we can have a stop loss effectively just after the breakout, and then have an entry potentially further up. Now what I'll show you is the different points. So in this example, where we have a stop loss here and the entry potentially on this area here, so what I've done is move this stop to that breakout level. Okay, and this is to give me a better risk to reward. However, the problem you will see with this is if price then comes back to retest the bottom of that triangle, you could be potentially stopped out. So that's the thing you need to decide. Would you want to enter the trade after the breakout and then on the retest? That could be one way of achieving this target. The other way one could look at this is take a short position, again, based on the stop loss being 2/3 down, which is within the triangle here, and the entry based on the breakout. Now, this entry can be on the breakout as such, like this, so around here, and what that can result in, again, a decent risk to reward, but the advantage you have, price breaks out, retest the breakout zone, and comes down into potential profit. And the advantage of this is you don't get stopped out. Then the next area we could look at is, again, from the bigger side of things, where what we could have is ideally, say, an entry over here, a stop loss at the point 4, and a target further down. And obviously understand this will be a less reward type trade because of the risk, and obviously our stop loss is 5% away. So what we need to do is understand in all these scenarios where we have the different targets, we would need to ensure that our trade size is portioned appropriately to the total stop. So for example, if this is a $500 trade that I'm risking on my account, I need to understand that when the price drops down by 1.121%, that is a stop out of $500. Okay, same as if, for example, in this case, we go for a stop loss that is 5% away. So our trade size has to be keeping in consideration of that 5% move. So effectively, you could turn around and have this as $100 trade size when you enter, but when the price moves back, say 5%, that would be a loss of $500. So you need to again calculate this properly. So this is how I would trade a descending triangle. If you have any questions or any feedback, drop it below. Thank you.